Hello everyone, welcome to another week of the Underwriting Guy. This week we're going to be talking about a strange guideline, one that I hardly ever see. I had a couple of mortgage professionals ask me questions about border income, and I had to actually decline a loan in my personal experience recently because a mortgage professional tried to use border income a way that you cannot. So let's dive in this week and see when you can and cannot use border income for conventional Fannie Mae. Let's first get the definition out of the way on what border income is. Basically, border income is when you have a home and someone is renting out a room in your house. Boarders are people who rent a room in a residential structure that is shared with either other boarders or with the owner of the residence. There is a shared common space and kitchen facilities, but the boarder will have a private sleeping area. When you have border income from a primary or a second home, it is not acceptable source of income unless we are doing a home ready loan, which we will talk later on, or the borrower has a disability and he needs a live-in personal assistant, which we would need to document. We also cannot use the full amount for border income. We can use up to 30% of the borrower's total monthly gross income. For example, if your borrower's total gross income is $1,000 a month, the max border income that we could use would be $300, even if the borrower is collecting more than that. We would need to document the borrower's income by obtaining proof of the residency. This can be with a driver's license, bills, bank statements of the borrower, and we must obtain proof of 12 months of receipt of income. Now, if you're doing a home ready loan, home ready has different guidelines. Home ready does allow border income, but make sure your borrower qualifies for a home ready loan. We can still only use 30% of the total gross income of our borrower, and it must be a one unit. We must make sure that the borrower is not obligated on the mortgage loan and does not have any ownership interest in the property and has lived with the borrower for the past 12 months. We would obviously need to document this shared residency as well as provide a history of payments for the last 12 months. Finally, if the borrower does not have 12 months, Fannie Mae will make an exception for 9 months, but the income will be averaged over 12 months. Please note that if the borrower is paying directly to a third party, this is not acceptable income. That's it for this week, guys. Thank you so much for tuning in. And as always, please make sure you guys like, subscribe, and follow. And see you guys next week.